Hello aspirants and welcome again to Legacy IAS Academy. Here we continue with our revision of all years, entire year's current affairs. I will be, as I said, taking up economics. We have already taken care of May and June. So now we'll be moving ahead with July 2024's current affairs related to Indian economy. So what all we'll be seeing, let us quickly have a look. The very first thing is the digital public infrastructure. So what is this infrastructure? Questions can be asked giving you some examples and asking which of the following is a part of digital infrastructure. So we will look in detail what it is, at the same time understand what is not digital infrastructure. Then angel tax is in news. The 24-25 budget actually removed the angel came up with the angel tax. So we'll see what is this angel tax, and does having an angel tax benefit, what are the repercussions. See, all those positive negative you don't have to as such go in detail. We may skip a lot of it, is because this particular session is going to be focused specifically on prelims or prelims orientation. Next is the sustainability development goal, the SDG, basically a report saying how much we are achieving it. You will see that less than 1/4, in fact less than 20% we are on track, more than 28, close to 80%, in fact over 80% we are off track. We'll see that in detail. Then you have e-mobility, city gas distribution network. So we'll see what are the components of city gas distribution network. We have coal sector in India. What about it? India is producing a lot of coal, huge amount of reserves are there, but still huge amount of import is done. Then SAARC currency swap agreement. So we will see what is currency swap agreement. Then credit deposit ratio, CDR. Then you have financial inclusion index, that is brought out by whom? We'll see that, RBI. Now new SEBI guidelines have also come for the credit rating agencies. What are these guidelines? Become very important. Inverse ETF. So we might have studied about ETF, that is exchange traded fund, but what is inverse ETF is what we'll see. And then the SAARC program. So this session or this series entirely is going to be focused on prelims. However, having said that, do not forget your mains, because once prelims is done, you get very less time for your mains, as a result of which you need to be pre-prepared specifically with respect to your answer writing, and you should get it done before. And it's not to say that after prelims you should not practice, you should of course, but before prelims get it done so that you are already at a level, and only thing that is required is revise and improve. So to address all your mains answer writing related challenges, Legacy IAS Academy has come up with Impact 2025, which is intensive mains practice and content training. So it is not the usual kind of a mains test series when you write the paper and you get normal feedback, in the market as improve on this, write that. No, it is a complete hand holding, subject wise, topic wise, for all the GS paper plus your essay paper, which is a game changer. So what you will get is comprehensive answer writing practice will happen. Content enrichment sessions will be there, in which literally in the sessions your content will be enriched. Personalized feedback and mentorship. So personalized feedback, and it's not just that you are given a feedback and then you don't even understand what it is. Rather, there will be a personalized mentorship included, wherein if you are having any confusion as to what this feedback is all about or how to improve, all those things will also be told. It will include, as I said, all your GS plus essay paper. You will be, each subject wide subject matter experts will be there. You will be studying this from the best in the industry. Essay specifically, apart from GS3 economics, I'll also be taking essay. So I'm, to tell you about myself, I am the topper of essay. When I gave my UPSC essay paper, I got more marks than all India rank 1. So this is the kind of faculty from whom you will be studying. Now, this entire series consists of 50 plus hours of classes, consisting of over 34 sessions. So you can simply understand that each session will be comprehensive of over 1 hour, close to 2 hours of sessions will be there. So don't forget to focus on your mains with the Impact 2025 by Legacy IAS Academy. So now let's get started with our prelims focus, that is July 2024 economics current affairs. So first thing, digital public infrastructure. Now the report of India's G20 task force. So India had established a G20 task force on DPI was released. Of course, it was released by India's G20 task force. Now, it talked about the development, the economic transformation, financial inclusion, and the development for digital public infrastructure. So we need to understand what is this digital public infrastructure. So far, what you have to remember is this report was released by whom? The India's G20 task force. Now, the important thing here is what is digital public infrastructure. So it is a shared digital system. Why it is shared? It is shared because it is public and it should be secure and interoperable. Secure, you know, it should be safe. Interoperable means it should be able to link with multiple platforms. Interoperable, operable on multiple platforms. It can be built on open standards and specifications. Open standards and specifications, and provide equitable access. What do you mean by equitable access? The equity in access, it should not leave out certain sections. It should be equitably accessible, governed by applicable legal framework. Of course, even if it would have been private, it would still be governed, but public definitely has to be governed by the legal framework that is present and respect human rights and fundamental freedoms. Human right, natural right, fundamental freedom, it should respect, means it should abide by it. Now, what is not digital public infrastructure? So for example, interventions which are complementary. Complementary means some complementary, not specifically core, but the complementary infrastructure, like individuals access to mobile and internet via physical infrastructure. So an individual's things which are helping you to connect, that is not a public infrastructure. Then digital processes that may not enable private innovation. For example, digitizing existing physical processes or workflows to create government portals. So this things will not, that process is as such is not a digital infrastructure. So you can assume that digital infrastructure should also be tangible, right? Now, what are the 5 major DPI categories within and across sectors? So within the sectors, what are these categories? Number 1, verifiable identity and registries. So a platform where the identities can be verified. Example, your national ID number, right? In Nigeria, in Peru, you have national ID number. For example, one person is given the social security number. For example, you talk about Aadhaar card in India, right? Then data sharing, credentials and models, sharing of data, the history, the profiling, everything. Now that is also in various countries through your national ID or the social security number. Everything is there. In fact, your medical history, this, that, everything. That is why it can at times become very scary also. I'll tell you how. Every detail is given. So what happens is, all of a sudden, it was just an imaginary thing that what can happen in the future is, you go to an ice cream shop to buy an ice cream, they say that you cannot buy ice cream. Why? Because they say, as per your social security number, you are having very high diabetes, so we will not sell it to you. So that kind of a future is also very much possible. Then signatures and consent. So example, the Aadhaar e-sign, you can do Aadhaar e-sign or various e-sign. It is also included in this. Discovery and fulfillment, accessing goods and services via different APIs, etc. And finally, the payments. So all these things are part of the digital infrastructure. Okay. What is India? So if we take a relevant Indian example, identity layer, you have Aadhaar, eKYC, as I said. Payment layer, you have UPI, Aadhaar payment, etc. For data government layer, you have DigiLocker. What is DigiLocker? Wherein you can store all your original documents. Now, DigiLocker, document stored in DigiLocker is as good as presenting an original one to the required authorities. Now, next is angel tax. So angel tax, what has happened is, in the previous budget they have abolished. Before that they brought this angel tax, and in budget 2024-25, not the 25-26 one, but in 24-25 the government has announced to abolish the angel tax for all classes of investors. Now, of course, when you abolish the tax, what will happen? It will boost the investor sentiment, right? It will boost the entire economy if you abolish a certain tax. So that is what impact it is going to have. Now, what is this angel tax? Basically, what is angel tax term coming from? It is coming from the term angel investor. Now, who is an angel investor? Probably they ask you a question on that. When you talk about angel investor, an investor who invests in a company at a very dormant, at a very initial budding, at the beginning stage of the company's development, that person is generally considered to be an angel investor whose motive is not profit making. The profits will be there if the company is successful, but the motive is not that. The motive is the, you know, the trust in that idea of the company, or trying to provide solution to the issues, etc., and the confidence in the person or the persons who are starting it. So it is more sort of a help. At the same time, it is at the beginning stage. It is not at a stage where you are already doing well, so someone is investing for profit. It is at a beginning stage and you don't know what will happen, especially when you know that around 97% of the startups fail. Okay, so those are angel investors. Now, what was angel tax? It was the income tax that the government imposed on what? On the funding raised by unlisted companies or startups. Right, funding raised by unlisted companies or startup if the valuation exceeded the company's fair market value. So as per fair market value, let's say your company is worth 10 crore, so 10% of your company's share can be sold at 1 crore, but someone is ready to invest 10% and give you 2 crore, so this is above the fair market value, so you will be charged on this additional amount because you are getting more than what your market value is. This was the angel tax. Now, what is fair market value? It is nothing but the fair price that an asset would have depending upon the demand and supply, wherein both the buyer and the seller want the best deals for themselves. Under such circumstances, whatever the value of that asset is known as its fair market value. Now, a term related to this particular thing not covered in the news articles, but I thought of mentioning, is reverse flipping, because it's related to startups. See, startups or other companies also, what happens is they may open their headquarters somewhere else in some other country. Now, because of abolishing of angel tax, maybe more companies would want to start in India itself. But let's say some company already started in another country, their headquarters is in another country. Now what happens is, if they think of coming back to India and establishing their headquarters in India because that will be strategically beneficial for them, then that process of shifting their headquarters from abroad back to India is known as reverse flipping. Now, why will they do that? If the government makes the ease of doing business even easier, the tax reduction, so on and so forth, can help in reverse flipping. So you should know this term. Now, next is the Sustainable Development Goals. So, Sustainable Development Goals Report 2024 was released by United Nations Department of Economic and Social Affairs, UNDESA, Department of Economic and Social Affairs. So, what is important to remember here is that if we look at on track or target that has been met, that is only 17%. It is way less than 1/5 of the target. Then you have around 18% moderate progress, marginal progress 30%. So highest is marginal progress. Remember this. You don't have to remember the exact percentages, but no, less than 1/5 is on track or met. Marginal progress is highest, stagnation is 18, and regression is 17. So it is basically like a mirror image, 18, 18, 17, 17, and in between 30. Right? So this is what you should remember. Now coming on to e-mobility. Now e-mobility, the e-mobility R&D roadmap for India report was released by the principal scientific advisor to the government of India, talking about the net zero targets. Net zero target does not mean, they can directly ask you what is net zero carbon emission. Net zero carbon emission does not mean that there will be zero carbon emission. Then what does it mean? It means that if you are emitting 100 tons of carbon, you will sequester 100 tons of carbon, either sequester or ensure reduction of 100 tons of carbon from somewhere else, as a result of which 100 minus 100 is 0. So net carbon emission will become 0. So this report basically focused on certain technical areas that require immediate action for net zero goal to be achieved. What are those areas? Number one, energy storage cell. So it is talking about fastening or accelerating the process of finding more lithium reserves, because generally the batteries that are used even in the EVs, electric vehicles, are lithium ion, lithium based lion. It is written as lion, that is nothing but lithium ion batteries. So accelerate the process of finding the reserves of that. Then EV aggregates emphasize on hybrid energy storage systems. How can you store hybrid energy at different places at the same place? So because storing is also a concern. Then material and recycling, economic analysis of recycling value chain. And then last but not the least, recharging and refueling. The issue with EV still is, of course, the disposing of the batteries, the size of the battery, at the same time the unavailability of the charging sockets. Let's say if I decide to buy an EV today, maybe my apartment does not support EV plugging, but in certain apartments there is a dedicated area for charging your EVs. So all those things needs to be looked at. Now coming to the city gas distribution network. So what is this all about? FICCI, recently in collaboration with PwC. PwC is a private organization. It released a report that was titled Charting the Path Forward with City Gas Distribution, Emerging Trends and Insights. You have to remember the report's name as well as who brought it out. So what is the value chain of gas distribution? First, sourcing of the gas from wherever it is sourced. So it need not necessarily be sourced from the center of the city, rather from the outskirts area probably. That is why you have to then transport the gas. Once you transport the gas, from one place to another reservoir, maybe from the sourcing place to the reservoir, and then distributing it throughout the city or throughout the region. For that you will need gas distribution network going up to the end consumer. Okay, going up to the end consumer, not necessarily in the form of cylinder, it can be in the form of pipelines also. Okay. Now, the technologies that are involved in this entire network is SCADA technology to monitor the compressor data. What is this compressor data? So when the gas is extracted, it needs to be transferred, right? So it goes through a pipe. Now the compressor data is the data which talks about what is the pressure in the pipe, what is the heat in the pipe, so on and so forth, which needs to be maintained. So that helps, or else that can cause a lot of safety concerns. Then GIS mapping, of course, location specific, the pipeline, the network, at which place, how much pressure, how much requirement. So GIS mapping is used. Now why we are discussing this is because a simple question can come that in gas distribution network what all technologies are included. So these are included: smart meters for precise billing up to decimals as well, right? And also, since smart meters will be there, there can be a process of prepaid gas, like we use prepaid recharge phones, that in the same manner. Then intelligent pigging. So what is intelligent pigging? It basically identifies, assesses and identifies pipeline conditions. So what it will do, it will detect if any corrosion is there, any rust is there, any leakage is possible before it actually happens. However, leakages can be identified through compressor data also. How? If you are sending a gas, its pressure is, let's say, 5 Pascal, but there is a leak from here, so its pressure will reduce, and through that data also you will understand that there is a leak. But why to wait till the leak happens? So that is why you have intelligent pigging data. What will it tell you? It will tell you the rust, the corrosion, the oxidation of the pipe, etc., so that you know at this juncture the pipe is corroded even more. So possibly you'll identify the failure points and avoid the gas leakages. Because of this gas leakage, of course there will be wastage, but more important than wastage is there can be a tragedy also in store. Then you have IT/OT convergence. It will enable faster decision, right? For example, faster decision as in faster decision in changing in Mumbai. In fact, I was about to come to the point of Mumbai, wherein the gas cylinders are now being replaced with gas pipelines. Next is the coal sector in India. So Ministry of Coal has informed that the compound annual growth rate of import of the coal has gone down. That means year on year we were importing coal and the amount that we were importing was increasing, right? The percentage of import was increasing. So there was an increase in the import. Now that has fell from around close to 14%. So year on year growth of import was around 14%. From that it has fell to minus 2.29%. That means the coal that we are importing year on year, it is now falling down, the amount we are importing. So this is the news which it is all about in the coal sector. You should remember this. So the question can be, it has consistently increased in the last 10 years? No, because now it is falling down. Or last 20 years? No, it is falling down as well. Now with respect to coal, remember India has the 5th largest geological reserve of coal. It is the 2nd largest consumer of coal, at the same time 2nd largest importer of coal. Now earlier India was creating 60% of its energy through coal. Now that has reduced because renewables share has increased, but still it is more than 50%. 50.7% of India's power generation is supported by coal and lignite. Next is the SAARC currency swap. So RBI has announced the framework for currency swap agreement for the SAARC nation for the time period of 24 to 27. So we need to understand the concept as to what is SAARC currency swap arrangement. What happens in currency swap arrangement? Let's say you have India here and you have Sri Lanka here. Now currency swap need not necessarily be in Indian rupees. Also India can do in other currency also. So let's take a generic understanding. So generic understanding, let's say this is country X and this is country Y. So what happens is country X has huge amount of dollars. This country requires dollars, right? So what will happen? This country will say, I will give you huge amount of dollars. What you do is, you give me, let's say this country requires pounds and this country has huge amount of pounds. So what you do is, generally let's say this is a European country and then let's say this is a non-European country having huge amount of dollars. So this is their home currency, for example. It need not necessarily be. So what it does is, it gives dollar over here and it takes pound over here at a predetermined exchange rate, let's say at an exchange rate of $1 is equals to 0.85 pounds. Let's say this is the exchange rate. Okay, now it also says that let's say after 2 months I am going to buy back. So I have given the dollars, I am going to buy back the dollars at an exchange rate of $1 is equals to either 0.85 or let's say 0.84 pounds, right? So why is this done? Because right now this country needs dollars, so it will utilize dollars in the meanwhile, and this country needs pounds, it will utilize the pounds in the meanwhile. They will do their work, get it done, and then swap it again. So swap is not just giving it once but then taking it again back. So I give you dollars, you give me pounds. After a predetermined time at a predetermined rate, I take back my dollars and you take back my pound. So that is currency swap agreement. So if you have to read it out, it is a contract, of course, between two countries which agree to exchange two currencies, of course, at a set rate, and then re-exchange those currencies again at an agreed upon rate at a fixed date in future. So we exchange currencies at a fixed rate, then agree to re-exchange it at a fixed date on a fixed rate. Now next is credit deposit ratio. What is credit deposit ratio? Now credit is nothing but the loan that the banks are giving. So that is your credit. Now the bank also gets certain deposits, so divided by deposits. So the amount of credit the bank is giving divided by the total deposit that the bank is receiving is known as the CD ratio or the credit deposit ratio. RBI is saying that this credit deposit ratio is increasing considerably. It is more than 75% for private banks. Means what? Means if you are, if you have 100 rupees as deposit, 75 rupees is being given out as loan. So your CD ratio is equals to what? 75%. So it has urged the banks to lower the CD ratio. That is what the news is all about. So CD ratio is what? Financial metric representing the percentage of loans a bank issues relative to its total deposits. Okay. Now, lower the CD ratio, the better it is in one way. That means the deposits are more, credit is less, but then it cannot be too low. Imagine you have CD ratio as 1. So 1 rupee you are giving out as loan with 100 rupees of deposit. No, that will not be also good for the economy. So it should not be too low. It should not go too high as well. It should be within maintainable, within the acceptable range. Now this has been the CD ratio fluctuation. It has gone year on year quite high. It went down over here, but again there is a high over here, right? So the RBI has requested that it should be brought within the limit. Next is the financial inclusion index. Now financial inclusion index is brought out by, released by the RBI. So what is it going to say? It is on the scale of 0 to 100. 0 means all are excluded. 100 means all are included. All are included. So what is the present performance? The present performance says that it is 64.2 as of March 2024 as compared to 60 in March 2023. That means around 64 people out of 100 are included. So if India's population were to be, let's say, 150 crore, you can say that 64 and 32 means 96 crore are included. Okay, so that is our inclusion level of financial inclusion. Now the parameters that it takes into account is excess, the weightage is 35%, usage, the weightage is 45%. Very important. Excess means, see, Pradhan Mantri Jan Dhan Yojana helped us to open the zero balance account as well, but are we utilizing it? So usage is also important, and of course the quality. It is published, this index is published annually. Now coming on to SEBI, that is Securities Exchange Board of India, it has come up with guidelines for credit rating agencies. What are credit rating agencies? Credit rating agencies are the agencies that give credit rating to the banks. Now when we take loan from the banks, they check our credit score, right? Even banks borrow money from different banks, from the market, so they also have their own credit rating as well, which is done by credit rating agencies. So SEBI has come up with new guidelines, and not just for credit rating is not just for the banks, it is for other financial institutions as well. It is also for the corporate players, big companies as well. So it has said that the communication of the rating should be done within 1 working day of the rating committee meeting. So credit rating agency, they do the analysis, the rate, they come up, have a meeting, discuss and come to an agreement on the rating. Now whatever the rating is, that has to be communicated within 1 working day of the committee meeting held. Now this companies for whom the rating was done, they can request a review or appeal of the rating decision within 3 working days. So if the rating given by the credit rating agency is not acceptable by this company for whom the rating was done, they can ask for a review or appeal against that particular thing. Now further, the CRAs must publish in a press release and on their website, and informed all the stock exchanges etc. within 7 working days. So the timeline is important here. So information should be passed within 1 working day, then you can request or appeal against it within 3 working days, then it should be published on the website within 7 working days, and the records must be kept for up to 10 years. Record has to be kept by the credit rating agency. Now next, inverse ETF. Now ETF is what? Exchange traded fund. Exchange traded fund, where the price fluctuation of exchange traded fund will depend upon the underlying commodity that is there. It can be gold exchange traded fund, so its price will depend upon gold. Now generally what happens is, exchange traded fund, you will want to invest in it and you would want the exchange traded fund to keep on increasing. Now in reverse, what happens is, which is also known as short ETF or bear ETF, because it benefits you when you short sell it or when the market is bearish. So what is different in ETF? In reverse ETF, in reverse ETM, what happens is it gains from a drop in the value of the underlying benchmark. In ETF, you will gain with the increase in the underlying benchmark. Here you gain with the drop in the underlying benchmark. It is of course only intended for short holding periods and also known as short ETF. Okay. Now, why was it in news? Of course, because SEBI had proposed to introduce a new asset class for investors which can offer investment strategies including long short equity funds and inverse ETFs. So for inverse ETF, it is proposing new instruments for that. That is why the concept of reverse ETF or inverse ETF is necessary. This we have already done. Now coming on to the SAARC program. SAARC means morning. What is this SAARC program? The SAARC program, Women Entrepreneurship Platform WEP and the TransUnion CIBIL has launched this program. So know these two organizations who has launched it. Now what is this SAARC program? See, generally the credit requirement is an issue. So that issue is resolved by interest subvention or the different schemes which provide you loan, which provide you credit. But there are hardly any scheme which also provide you hand holding, guidance, advice, etc. In Stand Up India scheme is there, the provision of the incubators which guide you, but not there in all or majority of the schemes. So this scheme is very good because it talks about training you in utilizing the money that you have, so helping in your business, right? Like a consultation, right? So what is here? It's a credit education program, very important credit education program which will help whom? Women entrepreneurs for accessing financial tools for their businesses, right? And financial literacy plus the business skills as well. I hope this is clear. Remember, it is for women entrepreneurs. Question can be based on that particular fact or about what it is. I hope that's clear. So these were the news which were present for economics in the month of July. Now let us look at a PYQ which is related to these topic, and also look at MCQ, which the type of MCQ that can be asked. So let's first look at the PYQ. The question says, despite having large reserves of coal, why does India import millions of tons of coal? Interesting question. We saw that India is the second largest importer. Why? So the first statement says it is the policy of India to save its own coal. No, absolutely not. That's not the policy. In fact, in the growing future, we would want less and less because renewable energy will be more. At the same time, if we need now, why to import? Of course not. So statement 1 is wrong. So this option is gone, this option is gone, and in fact, this option is also gone. So the only option that remains is 2 and 3. But still, don't like this market. Still read all the statements. What is the second statement? Most of the power plants in India are coal-based and they are not able to get sufficient supplies of coal from within the country. That is correct. Steel companies need a large quantity of coking coal. Yes. In fact, once a question was asked that what of the following the steel company needs, one of the option was coking coal, and other things were also present in the question. So yes, the answer is 2 and 3. Now, let's say what kind of question can be asked. So if we talk about what can be asked, we have studied angel tax. So consider the statements regarding angel tax. Statement 1, it is a tax levied on the capital raised by listed companies in excess of the fair market value. Yes, it did mention in excess of the fair market value. It is not asking whether it is presently imposed or not. It is just asking the concept, right? It is a provision applicable only for investment received from resident investors. No, not necessarily. So option A will be the correct answer here, right? So this kind of questions can be asked. You go through it, read, revise, make notes of it, and your economy for July month will be covered. So stay tuned with Legacy IAS Academy. We'll be coming up with the future months as well. Thank you.